Okay, so today we're going to be doing a financial comparison for the 2016-2017 years for Chevron and Total.
So a little bit of history for Chevron. In 1816, founders Demetrius Goldfield and Frederick Taylor of the California Star Oil started drilling and found oil in Pico Canyon, Santa Susana Mountains, California, with the help of driller Alex Muntry. They did not have enough capital to market, so Colonel Charles Felton from the Pacific Coast Oil acquired the small refinery of Demetrius Goldfield and Frederick Taylor in September 1879. With the acquisition of Pacific Coast Oil, they were able to build California's most modern refinery at that time, which was able to produce 600 barrels per day. By 1895, they launched a steel tanker, which could ship 6,500 barrels between Ventura and San Francisco. One of their biggest competitors at that time was Iowa Standard Oil. In 1906, Iowa Standard Oil and Pacific Coast Oil, they consolidated both companies and created a new entity, Standard Oil of California. The new company increased marketing and gasoline sales and came up with a new sales mechanism, which was the creation of the first service station, which was located in Seattle. In 1917, Standard Oil hired Fred Hillman as director of the producing department. He then hired Eric Strake, a geologist who used a scientific approach and in 18 months discovered 7 new reserves. With these new places, they were able to increase production to 30,000 barrels per day. Eric Strake created the Strake gas trap, which was a new technological way to conserve energy resources. By 1918, Standard Oil entered the aviation fuel business. Here's a picture of the ad of what it used to look like for the Pacific Coast Oil Company. History continued. By 2005, Chevron integrated the field of business, from the exploration to the delivery of the product. They have a three-dimensional visualization technology that allows geologists to look underground rocks and look for potential discoveries in them. Places they've discovered are in Australia, Pakistan, Singapore, Thailand, South Korea, Venezuela, Canada, Saudi Arabia, and more. Their future goals as of 2015 is to become better in the achievements of higher levels of safety, operations, and environmental excellence. As of 2015, Chevron has been number one amongst its earnings per barrel, and they have become a leading global producer of premium base oil.
Total was started in 1924 as Compagnie Française de Pétrole. It was initiated by the government and was headquartered in Paris, France. They then began to primarily explore and produce oil from the Middle East. After World War II, they expanded their exploration to include Venezuela, Canada, Africa, and Algeria, Algeria later becoming their leading source of oil in 1950. CFP changed their name to Total in 1991 when they became a publicly listed company on the New York Stock Exchange. They now do business with over 130 companies, they explore more than 30 countries for oil and gas, and recently they have started to explore other sources of energy like solar.
Chevron's annual revenue is of $141,722 million as of 2017. They employ 52,000 employees as of 2017. Their SIC code is 2911 Petroleum Refining. They exchange in the New York Stock Exchange. Their ticker symbol is CVX.
Total's annual revenue is $197.6 billion. They currently have 98,277 employees. Their SIC codes are 1382 for oil and gas field exploration and 1389 for oil and gas field services, respectively. Their ticker symbol is TOT, and they exchange on the New York Stock Exchange.
The change in capital structure of Chevron from 2016 to 2017 is expressed in the pie charts below. The capital structure of Chevron largely remains unchanged from 16 to 17, except for the short-term and current long-term liabilities, debt obligations, which are cut in half during 2017. It is important to note that Chevron does not utilize the preferred stock as a capital option, and they also comprise more than half of their structure in retained earnings.
So the capital structure comparison for Total. So most of what makes up the capital structure stayed the same. The ones that changed the most were short-term and current long-term debt. It almost decreased in size by half, 2.95% to be exact, and the retained earnings also had a small significant change. It decreased in 2017.
Here's a breakdown of Chevron's capital structure expressed in billions of dollars. While again many of their capital sources are unchanged, the most notable movements in 2017 see about a $5 billion decrease in short-term debt. This factor, along with small movements in other areas, produce an $8.5 billion decrease in total capital.
So for Total, the total increased by 2.94 million between 2016 and 2017. The short-term plus current long-term debt decreased by 3.65 billion, and then the other current liabilities decreased by 0.8 billion.
The income statement for Chevron gives a better picture of how the company is performing. While oil prices declined in the first and second quarters of 2017, upward trends in Q3 and 4 spark an overall increase in income. Chevron's revenue increased $14 billion throughout 2017, which produced a net income profit of almost $9.5 billion. On Chevron's balance sheet, it shows an increase in cash on hand through 2017. This is a reaction to increasing oil demand and revenues. The decrease in cash signifies a switch to be more aggressive in their operations. This is reiterated when comparing 2016 and 2017 inventories, which show a decrease of about 400 million in crude oil reserves. While first and second quarter crude prices in 2017 decrease, quarters 3 and 4 see a return of stronger oil prices. Again, in the cash flow statement, we see an increase in the consumption of cash, signifying an increase in operations. The spending of more cash by Chevron can be seen in the increase of active rigs all around the globe. Another significant source of cash expenditures for Chevron are seen in research and development activities that are exploring areas such as renewable energy and alternative fuels.
Okay, so the income statement for Total, the sales increased a little over 20,000, 21,750 is the exact number that it increased. Revenues from sales also increased by 21,174, so again a little bit over 20,000. Other income also increased by 2,512. Other financial income decreased by 14, and lastly the total income increased by 2,093. In the balance sheet, it says that the total current liabilities increased by 2,020. And then the total liabilities plus shareholders' equity also increased by 11,653. The cash flow. So cash and cash equivalents at the beginning of the period increased by 1,328, and cash and cash equivalent at the end of the period increased by 8,588. The consolidated income increased by 2,093. Cash flow from operating activities increased by 5,798.
Here in the ratio analysis for Chevron, we see a lot of good numbers. Starting off with the current ratio and the quick ratio, both increasing during 2017. Um, the highlighted fields are inventory turnover, total asset turnover, and price to earnings. The inventory turnover increased by 4, which shows that Chevron is using their assets better and creating more profit for all their inventory that they're turning over. Same with the total asset turnover. They're utilizing their assets better to create more profits for the company. The price to earnings did take a hit, signifying that the stock is less, strong than it was a year ago. But the company overall is in a pretty good spot.
So, for the ratio analysis, for the liquidity ratios, the current ratio increased by 0.17. The other liquidity ratio, which is the quick ratio, increased by 0.13. And then for profitability, the profit margin ratio increased by 0.94.
Here are a list of competitors. So for ConocoPhillips, they started off as Marlin. In 1928, J.P. Morgan Jr. took control of Marlin. In 1929, Marlin and Continental merged and created a new entity, which was known as Continental Oil Company, also known as Conoco. By 2007, Conoco and Tyson Food Company partnered and created an alliance to create a new way of producing renewable diesel fuel from beef, pork, and poultry byproducts. In 2012, the approval for separation between ConocoPhillips refining and marketing separated from the exploration and production sector, and so began the creation of Phillips 66. Between the years of 2014 and 2015, Conoco played a huge part in lifting the ban from crude oil. They were important voices in the process of lifting the 40-year ban that prohibited U.S. from exporting crude oil to other countries. They currently employ 11,400 people. Valero was named after the mission of San Antonio, the original name of the Alamo. It was created in January 1, 1980. Production began in the mid-1980s when the company purchased a refinery from Sabre Energy in Corpus Christi's Ship Channel. It employs 10,000 people with an output of 3.1 million barrels per day, making it the world's largest independent refiner. In 2009, Valero entered the ethanol business and since then has been able to produce 1.45 billion gallons per year. By spring 2018, Valero expanded to Latin America and acquired pure biofuels from Peru. Phillips 66. In May 1, 2012, ConocoPhillips created a publicly traded company called Phillips 66. As of 2018, there are 14,600 employees. People moved to its new headquarters in Houston to complete a midstream and export project on the Texas Gulf Coast. This project is to move from the production of refined products and to concentrate in the transportation of energy and processing infrastructure. It will invest $1.2 billion in its natural gas liquid and transportation businesses.
These are the competitors for Total. BP was originally created in 1909 as the Anglo-Persian Oil Company Limited, and it was a company that was formed to take over and finance an oil field concession granted by the Iranian government to an English investor known as William Knox Darcy. It is now a British multinational oil and gas company headquartered in London, England, and one of the world's 7 oil and gas supermajors. Their performance in 2012 made them the world's 6th largest oil and gas company, the 6th largest energy company by market capitalization, and the company with the world's 12th largest revenue turnover. Lukoil is a Russian multinational energy corporation that specializes in the extraction, production, transport, and sale of petroleum. Formed in 1991 when 3 companies merged, it is the 2nd largest gas company in Russia, Gazprom being the 1st largest. Shell was started by Marcus Samuel in 1833 when he decided to expand his London business. In 1892, in 1892, They were the first company to commission oil tankers to carry oil. They're a U.S.-owned subsidiary of Royal Dutch Shell that's headquartered in Houston, Texas, but they were officially founded and incorporated in 1912. They provide diesel fuel, gasoline, and LPG, liquefied petroleum gas, or propane. Exxon, formerly known as Standard Oil Company of New Jersey, was founded in 1870 by Rockefeller. In 1972, they were officially changed their name to Exxon Corporation. Exxon and Mobil were both part of Standard Oil and merged in 1999 to become ExxonMobil. They're headquartered in Irving, Texas, and they are the world's ninth largest oil company.
Hope you enjoyed our presentation about Chevron and Total, and thank you. Here are our sources.